Joining me now is Paul Huet, the chairman and CEO of Karora Resources, and Oliver Turner, executive vice president at Karora. Gentlemen, thank you for joining us. Congratulations on this big deal.
Yeah, thanks, Mark. Hard not to be excited here. Been a lot of stuff going on, but we're very happy to be here. Even more excited about the announcement in the future.
All right, well, let's dive into it here. You've announced a merger of equals with Westgold Resources. This will create the third largest gold producer in Australia and the largest unhedged gold producer in that country. So just first off here, Paul, if you could explain the structure of the deal. What are the numbers here so Karora shareholders know exactly what they're getting?
Yeah, good. Thanks, Mark. First and foremost, I think you touched on something that's very, very important, and that's been a bit of confusion with some people. It is absolutely what you said, a merger of equals. We're 49.9%, but the reality is we're along for the ride. Our shareholders, everything. This is a very exciting time in our company's life where we get to participate in the third largest gold producer in Western Australia or in Australia, and completely unhedged. And let me talk about the structure of the deal as you asked. Look, it is a 590 Canadian bid. It's made up of a couple components. Predominantly, about 90% of the deal is owning that 49.9% of the newco, and that was really important to us and our shareholders. We've heard our shareholders very loud and clear. They want to remain in a gold story given the gold prices, and they want to remain part of what we started at Beta Hunt. And again, the combination is, we're going to talk a bit about it today, is nothing. It's very exciting. I was going to say nothing other than exciting. So about 90% is owning 49.9%. There's a portion of it in cash, and then there's a portion of it in SpinCo. So there's three components of it, but the most important part of this message is, look, we're owning about approximately 50% of the new company, and that's what excites us the absolute most as we continue to take advantage of this absolute amazing gold price that we're going to be part of here.
Right, the gold above $2,400 today as we speak, and moving higher, and gold stocks finally starting to move, and we'll talk more about that in just a second. But Oliver, you said that this new entity, this new company, should eventually get a re-rating once the deal is closed for a variety of reasons, including the inclusion of the stock in various indices that fund managers have to track in Australia and in North America. So can you run through a few of those benefits of the deal?
Yeah, I would be happy to. And yeah, no, we're definitely excited about the pro forma company and obviously being 50% owners. So one of the key things that we're excited about is, first of all, is multiple capture. And then the second thing is the index inclusion, which I'll talk about there. So over the last several years, there's definitely been a bit of a valuation gap or a disparity in valuations in the way that mining companies trade on the TSX and the ASX. And in the mining business, we all love to mine in our own backyards. So there's always a bit of a in your backyard or home country bias. So what that means is that Australian assets tend to trade at a premium on an Australian index, and Canadian assets tend to trade at a premium on a Canadian index or the TSX. What we have with Karora, of course, is a fantastic set of Australian assets that are listed on the Toronto Stock Exchange. So we've always traded at a little bit of a discount to where those assets would trade in Australia. So what we're doing with Westgold is we're coming in with about a 0.7 to 0.75 times PNAV multiple, or price to net asset value multiple. Westgold assets are trading north of 0.8 times. You combine those two, so they're trading at a little bit of a premium. You combine those two, you put them into the scale, and you mentioned it right at the beginning, the third largest gold producer in Australia, fully percent unhedged, which cannot be understated how important that is as you watch the gold price doing what it's doing today and over the last several weeks. We expect that to re-rate back up to about a 1.1 to maybe even a 1.15 times multiple. And as momentum in the sector starts to increase, you can even expect further multiple expansion beyond that. So first and foremost, you're getting what's called multiple expansion. You're getting a premium to your asset value when you list in Australia, and you get an even bigger premium to asset value when you reach a critical mass that brings in generalist shareholders. So that's number one. The second vehicle, or tailwind, let's call it here, why we're excited, and this is all due to passive capital flows that dominate trading these days. About 60% of money these days that circles around it follows and tracks indices. So in North America, we're all very used to, or core shareholders are used to, the GDXJ, which we've been a proud part of for several years now. The GDX is kind of the next scale for larger companies. Once you cross a certain threshold, it's about $800 million US market cap. You're then on to that indice. So we expect this pro forma entity, which will be dual listed. Remember, it's going to remain on the TSX and it's going to be on the ASX as well. That will graduate to the GDX. So we'll get mandatory index buying from that basically increase in scale. Switching over to Australia on the other side of the listing, we also have ASX 200 inclusion. So Westgold is currently included on the ASX 300, which is the top 300 stocks on the Australian Stock Exchange. This graduation to the ASX 200, when you look at the peer group table, every one of the peers, both above and below us, is already included in the ASX. So you have mandatory ASX 200 buying. So that's really powerful to have that kind of tailwind coming into the close of this transaction, which will be around mid-July, having that mandatory index buying coming behind you, and the measurement dates will be in September. Now, the last component I want to layer on top of this in terms of buying tailwinds is you also have superannuation capital in Australia, which is something that all of us in Canada are truly envious of. Well, Karora shareholders are now going to have access to that superannuation capital through the dual listing. And the superannuation capital in Australia, it certainly plays in the top 100 or the ASX 100, but they also start to make some select investments down to the ASX 200 as well. So really 3 different types of tailwinds, irrespective of gold price, that should really be making this thing a pro forma success once the merged entity is complete.
All right, very good. Paul, back to you. You've been a part of a number of deals in your career, and you say that this arrangement is a textbook case of synergies with cost and operational savings in the neighborhood of nearly $440 million Canadian over time. So can you run us through some of the synergies here? And we're talking obviously equipment, labor, and many other areas.
Yeah, look, obviously you've been listening to me on something here, Mark, because you're absolutely right.
They did a great interview with you.
Yeah, there's no doubt. Look, I'm a big believer in these synergies, and they matter. They matter a lot because you can do a lot of things with the additional cash. And let's talk about the synergies here. First and foremost, I have had a lot of experience doing these types of synergies before. I worked in Nevada for Newmont. I was their general manager at the Midas mine for a number of years. I was part of a group that looked at the evaluation of putting Newmont with Barrick together, which eventually formed to Nevada Gold Mines. And when you consider those textbook synergies, we have something very, very similar. Except we start all the way at the top and we start looking at our board of directors. There are synergies there. We're going to have 2 people going on the board, Lee Junk and Shirley, myself coming in as an advisor. There are synergies right from there. G&A wise, look, G&A from every company, we're always very attentive and very alert on making sure our G&A doesn't creep. There are tremendous synergies with our G&A. Where our offices are located around the corner from each other here. We can consolidate that, use our people together, and eliminate our North American office without eliminating the TSX listing. I think it's really important. Oliver did say it, but we're not talking about eliminating the TSX listing. We can still maintain that. But right at the top, you start looking at, well, where's the value here? There's about $20 million right at the top there. That's a lot of money. What do you do with that money? Well, you can turn it into the dividend. We've talked about a dividend. Wayne's already paid a dividend. Or you can turn it into the drill bit. You can turn it back into shareholders. There's a lot of things you can do with that. But it cascades further. I'm just talking about the top level here. You think about the equipment. Right now, Karora has approximately 30 pieces of mobile equipment. And I'm not talking the light vehicles with the trucks and the stuff that transports our people around. I'm talking about jumbos, trucks, scoops, drills, all those bigger pieces of equipment that we have. Westgold has 130. They're not producing 4 or 5 times the amount of ounces than we are. That's not the case. That means they have a surplus of equipment, and that's very important. And you got to ask yourself, well, I know I asked myself right away, why do they have this equipment? And I went to every site and I was asking Wayne and Philip, why do you have this gear? There's trucks here, scoops. It's amazing. This is fantastic. The amount of gear we could bring into our assets. And it's because Westgold used to own a contract company. Their owner operator now, Wayne, has changed the model. He's done an amazing job in 2 years. And changing the model, that equipment remained there. We can start putting that equipment to work right away. We can start bringing some of the core drills to Higginsville. You know, if anything's been a victim of our success at Beta Hunt, it's the fact that we haven't been able to drill at Higginsville a lot. Now, with a balance sheet and additional drills, we can start bringing in drills at Beta Hunt. We can start bringing in equipment into, or I said Beta Hunt, I meant Higginsville, but both of them, to be quite honest. You could start bringing in equipment at Spargos. That's an underground operation that we talked about that we haven't started up. There are a lot of things we can do with that equipment, and any piece of equipment you buy today is anywhere from, call it $1.5 to $2 million, Mark. But more importantly, the issue we all have as operators is the time. If I order a brand new piece of equipment today, it might take 12 months, 18 months, 24 months, depending on what it is, a 2-boom jumbo or whatever that piece of equipment is. It has a long lead time. By having the equipment stayed on their property right there and bringing it, we're talking about just throwing it on a float and bringing it across here. This is a tremendous advantage that we never had and we couldn't have been able to do on our own. And then you start thinking a little further. This is something I've done 4 times. I did it at Newmont. I was a big part of this aggressive campaign at Newmont. I did it at Great Basin Gold. I did it at Klondike, and I did it at Karora when I first started. When you buy in, and you talk about our vendors buying in bulk, it matters. It helps the vendor with their forecast on their consumables, but it helps us on what we buy. Let's think about the mill, all the reagents, the ball mills, the liners behind the mill, cyanide, anything we're buying for all our mills now, we're buying in bulk. Or let's go underground. You look at tires. Tires are a very expensive thing. Diesel, rock bolts, all the ground support supplies, ventilation supplies, the drill steel or the drill bits on the end of a jumbo. Everything we do, Mark, it doesn't matter what it is, everything we do now, we can now sit with the top 20 vendors and meet with them and negotiate in bulk. That will have savings. We only used 5%. We were very conservative in this metric on the $60 to $70 million of annual savings. We were very conservative. I was pushing to say, look, we should push towards 10%. There's no doubt we're going to get there. I've done it. I've done it a number of times. We should target even better. We agreed to use a lower number because we said, let's be conservative and make sure we hit those marks. And those are absolute real annual savings. And again, where do they go? Well, there's a lot of things you can do with $60 or $70 million of added cash on the balance sheet every year. Alone, I can't have that. Alone, he can't have that. Together, we can have that. And that's a big change. Now, let me talk about some of the stuff that you cannot quantify. When you have a couple mil, let's use our 2 mines first. Our 2 big mines. We got Big Bell or Beta Hunt. Let's say you're working at one of our Big Bell mines, Mark, and you go, you know what? It would be so much better for me and my family if I could work at Beta Hunt, because that schedule, I live in Campbell, I could be home more often with my wife and kids, and that matters a lot. Or the reverse. It would be so much better if I wasn't working at Beta Hunt, I was working at Big Bell for the same reason, so I could spend more time with my kids and my family. Those are real synergies. Those you can't quantify yet, but they happen and they absolutely exist. And what's the number one risk we've had in Australia for 5 years? 1, 2, or 3 has always been the same for the 5 years I've been in Australia. It's labor. If we can start reducing our turnover rate, and it will happen. It's not maybe, it's about when. Because if you're in our mill, for example, our Higginsville mill, and you want to go to their mill and you want to transfer for the same reason, rather than quitting Westgold and coming to Karora, or vice versa, quitting Karora and coming to Westgold, you stay in the same company and you transfer. And right. That's real synergies. And people want to be with their family. They want to go home to their families. They want to be part of a bigger thing. And this allows them that optionality, something that we cannot quantify yet, but it goes even further to what are some of the expensive things we have onboarding. The first 3 months of an employee's startup in a company is always the most expensive, where you got to onboard them, train them, make sure they're all up to our standards. And then a lot of times that's the highest rate of turnover is that first 3 to 6 months. You're like, man, I spent all that money training these people. This will make us more efficient. It'll help on safety. It will help on turnover. We are unable to quantify that yet. It is something that will occur as part of the merger. So when you think about textbook synergies, look, I had the privilege at the age of 40 years old to be part of a group at Stanford. It was a mini MBA. It was an amazing thing. And all they did time and time again, they did case study on Google, case study on Apple, and how we do these case studies on synergies. This is a textbook synergies. You can use this and it could easily become a case study because the synergies here are overwhelming. They're real and they will translate into dollars, which will help our shareholders and eventually help in the share price, which is a huge deal in what we got, the highest gold price in history. Look, Karora yesterday sold ounces of gold at $3,657 an ounce. Mark, let me say it one more time. $3,657 an ounce of gold. Look,
and that's a record price, right?
Yeah, that's Australian. I've been mining 35 years. I was a bad hockey player in Canada. I went underground at 18 years old. People know that. But look, if I would be telling my dad, he was a miner forever, selling gold at $3,650 an ounce, he'd be turning in his grave going, I can't believe it. So it's an amazing time to be in gold. It's an amazing time to form this company and for our shareholders to be part of an amazing re-rate. The synergies are very real and are very exciting.
Okay, well, thanks for laying all those points out for us. Let's pick up on one of them, Oliver, that Paul made specifically about Higginsville, because Oliver, you said that this deal really can help Karora advance certain projects such as Higginsville, which, as you've said, has been sort of the victim of the success of Beta Hunt, maybe neglected a bit, maybe you didn't quite have the resources, but now you will. So can you detail a few of those projects that you can accelerate?
Yeah, happy to, for sure. And it's really been, we've been capital constrained in an environment where we were growing Beta Hunt at the pace and the scale that we have while maintaining a working capital balance that ensured that we were in good financial standing. So all of our resources have really been devoted into Beta Hunt, and Higginsville has been absolutely critical to get us there over the last 4 years in terms of cash flow generation. We've invested over $400 million into expanding our assets over the last 4 years, and a huge component of that has come from Higginsville. But one of the victims, as you mentioned, of the success of Beta Hunt has been exploration at Higginsville. So we have some absolutely outstanding targets at Higginsville right across the entire 1,800 square kilometer tenement package, which, as a reminder for your viewers, that is the largest coverage of that entire Zaluka Shear trend, which hosts 100 million ounces in the gold fields around Kalgoorlie. So we're certainly excited to get the drills turning there. Westgold has a large fleet of drills turning right now, and they will actually be sending some of those drills down to Higginsville and Beta Hunt to attack some of the targets that we talked about. So very excited to get that pushed forward. Otherwise, that's some stuff that we'd probably have to wait another 18 months until we get into that strong free cash flow generating period at Beta Hunt to really turn the drills loose there. So excited about getting the exploration work advanced there. And then there's two other areas. Paul touched on them as well. Spargos, which is our high grade underground mine. We mined 40,000 ounces out of an open pit there. A year ago, we made the decision to defer it by 1 year, not because we didn't want to push it. Of course, we wanted to push that as hard as we could. Once again, we were capital constrained. We had a choice to make. Either are we going to push into Fletcher over here at Beta Hunt, which we're very excited about, or are we going to go into Spargos? We're going to look at some of these other projects that are at Beta Hunt. So we're basically able to bring a lot of Wayne's equipment down to Spargos. That's fans, generators, underground mining equipment, and take that owner-operated approach at Spargos as well, which will be north of 25,000 ounces a year, but high margin ounces. So that is meaningful, which is great. Then the last project, this is going to be part of a process once the company has merged together. Look, we're going to go through all the projects in the portfolio of both companies, because one of the things you need to keep in context here when you're looking at capital allocation and project optimization and prioritization, you look at it in a holistic view. So we're going to take all of Westgold's projects, we're going to take all of Karora's projects, put them together, and then start ranking them in terms of the way that we can move things forward. And certainly one of the more compelling projects to reevaluate at these gold prices with potential synergies from equipment uses is, of course, we've got 1 million ounces in resource sitting down at Mount Henry, right? We made the decision to push the expansion out of Beta Hunt. Mount Henry ounces have not come up into that mill since we first bought the asset. As a reminder, originally Westgold was actually shipping those ounces up towards the Higginsville mill. So, that's not a small quantum. We've done some internal work on it, but it could add some very significant ounces to our production profile, profitable ounces going forward, particularly at these gold prices. So the merger of these two companies just allows you to view things in conjunction or as a combined business that you could never do on your own, or if you could do, you still had to wait another 18 months to get there. So accelerating those projects is something we're extremely excited to do.
Now, Paul Oliver mentioned Wayne Bramwell, the managing director at Westgold Resources. He's a gentleman we've interviewed before here at Red Cloud. So what can you tell Karora shareholders about Bramwell, because he's ultimately the guy who's going to be running the show?
Yeah, look, I've had the privilege of knowing Wayne now for a couple of years. I'm a big fan of Wayne. He's a rock star in the mining industry, in my opinion. So the first time I met Wayne, I'll never forget meeting him, Mark. We were at a show together, and he stood up on a podium and he said, I will never apologize for shutting down operations that are uneconomic. And then I thought, wow, that's a pretty powerful statement from a gold CEO. But what he did next was even more important. What he did next was, in the next couple months, he reduced guidance on some of these satellite areas and said, I'm going to shut these areas down. But he said, I'm going to produce less ounces, but I'm going to make more money. And I always remember hearing him say that. And let me repeat that. I'm going to shut these areas down. I'll produce about 40,000 less ounces in my portfolio. However, I'm going to make more money. That's the kind of guy you want running our company. Look, if these assets were all in North America, Wayne and I would have been arm wrestling to see who'd been running it, because I would have loved to run this pro forma company. It's in his backyard. He should be running it. He's got a very strong team. You just look at his track record. He's been there 2 years. Look what he's done with the company in 2 years. He's had 5 quarters in a row, quarter after quarter after quarter after quarter, delivering free cash flow. He's got a very strong team with Simon and Phil around him. Very, very strong board. Once you add Lee Junk and Shirley Intervelt into that board, Lee's experience on the nickel, we have tremendous nickel again at our operations. Don't ever discount that. But Wayne, in my opinion, is going to be leading this, and we're very happy that he's going to be leading this, because he's very energetic and very passionate about it, and he's the right guy to lead.
All right. Lastly, gentlemen, let's get a brief word from both of you. We've got gold record highs, well above $2,400 an ounce as we speak. Gold stocks are finally starting to move. As you know, you've struck this deal, this merger of equals with Westgold Resources. So against that backdrop, the gold picture currently, can you give us just a few high-level details as to the strategic rationale behind this arrangement and the prospects in the future going out a couple of years?
Yeah, so look, when you think of strategically what this thing does, you opened up with it. A company that's 400 to 450,000 ounces a year combined, that has a lot of additional buying, unhedged. That is amazing. What can the future hold? Well, just continue to watch us. Look, each of us in our own way, you look at Karora 5 years ago, you look at him 2 years ago, have been able to overcome tremendous amount of criticism and obstacles to build good companies. And now we're heading into the greatest gold market we've ever seen in our lives. So look, I think that the best is yet to come. We will get a powerful re-rating. It's no more exciting time than now to be taking advantage of this.
Yeah, and I echo what Paul said. And one of the things that I want to touch on, without going back to the market excitement, multiples, and how excited we are to own 50% of this pro forma business. But when you look at the commodities business, it is cyclical. We all work in cyclical commodities. We are right on a ramp into a secular bull market here in gold. And the reason why I'm saying that is there are windows in this business, and we have a golden window that's opened up right in front of us here. So by accelerating these projects, by combining these businesses moves into something that has more critical mass, we're able to capture and capitalize on that window while it's here. And look, we hope it's for years to come, of course, but we're also not naive. This is the gold business. It's cyclical, it goes up and down, right? So we're building what we believe is the best gold producer in Australia, 100% unhedged. And we know that we're hitting the window at the right point in time.
All right. Well, thank you for your time today, Paul and Oliver. Very exciting deal, very exciting times, and we'll be watching closely. Thanks again.
Thanks, Mark.
Right.
Okay. Thank you very much for joining us for Paul Huet, Chairman, CEO at Karora Resources, and Oliver Turner, the Executive VP. We'll see you next time. Take care.